So much for cautious optimism. Fresh gloom as UK growth numbers tumble, German business confidence shrinks, and the markets digest Deutsche Bank's profit warning. There is a ray of hope, though, for the Eurozone after an ECB policymaker says there's good reason to add firepower to the region's new bailout fund. Let's get straight to David Page, senior economist at Lloyds Bank WBM. Hi there, David. Does George Osborne, our finance minister, need to rethink his approach?
I think not at this stage. I think what Osborne's done, along with the Bank of England, is put in place a number of measures that they hope will turn this very disappointing phase of underlying economic activity in the UK. And they'll hope that that happens across the course of the second half of this year. But I think, if the UK guarantee scheme and other measures that have been put in place to try and encourage private sector investment into the UK fail, then I think one has to look at more old-fashioned traditional measures of fiscal stimulus, and I think that could be a story for 2013.
He talks about suffering from deep-rooted economic problems. It seems these problems are worse than he thought, right?
Well, some of them are. I mean, clearly what continues to dog the UK is the deterioration in the Eurozone. We continue to see problems from the US economy, although we think that fundamentally that's picked up, and the softening in global economic activity has really undone any hopes the UK has of rebalancing across the course of this year. Of course, we've got the negative effects of rebalancing hitting, but we don't benefit from any of the positive factors like net trade increases and particularly business investment. So it's that needs to come about.
On the monetary policy side, what are you expecting now? Are we going to see another rate cut?
No, we don't think that a rate cut is going to be the bank's primary tool. I mean, we're watching the Jackson Hole Symposium at the end of August as a key indication of whether or not central banks change their mind on this view. But I think the Bank of England's position basically reflects central bank orthodoxy. So to our minds, they'll be looking at the impact of the FLS, but we think that QE is going to be the stalwart of policy over the next few quarters. We're certainly looking at an extension beyond November, and we're penciling in a total of about 500 billion by the end of 2013.
All right, and what do you, just finally on the UK, what do you make of this mismatch between these numbers and the type of manufacturing weakness we've seen and the employment numbers in the UK that keep growing?
That's the key question. I think manufacturing is slightly different. Manufacturing is where you're actually seeing productivity rise. Manufacturing has fallen, but we've actually seen a large headcount. It's the service sector where the real question mark is. How can employment be rising at 180,000 headline number, 140,000 if you exclude for the government's programs that are in there at the moment, and yet the economy be in recession? The numbers really don't stack up, and one of those numbers has to give over the next couple of quarters to give a better underlying picture.
Okay, on to the Eurozone, which of course provides so much of this context. More bad news for Germany, of course, the IFO survey not looking good. Do you focus more on that, or does the market focus more on all this bad news, or do you think the part of the solution, which is more firepower for the bailout fund, is what we should be focusing on?
Well, I think both. I mean, the deterioration in the Eurozone economy is only going to exacerbate the Eurozone crisis, and that's always been the case. Had the Eurozone crisis happened against a background where actually we were seeing positive growth, then it would be much easier to have hit these fiscal targets that many of the peripheries and indeed the core countries are struggling to meet, and so you didn't get into this negative cycle. So the fact that we now have another period of what looks like relatively deep retrenchment in the economies across the Eurozone is only going to add to the market's concern. So that's the first point. Second point is, do we see some resolution coming through there? Clearly we need to add to the firepower of the firewall, but that's been the case for a number of years, to be perfectly honest, and it hasn't come about. So we take little solace from the fact that one member of the ECB has suddenly woken up to the fact that we need a bigger firewall. That argument has been out there for 2 years, and it's not met with much response yet. Absolutely.
David, thanks a lot. David Page from Lloyds Bank WBM. That was Market Pulse. I'm Axel Threlfall. This is Reuters.